Hey guys, so crypto time. Hope everyone's still alive. You're not using leverage, as I say, because you could be in the zero at the moment. So we're obviously down, 50, getting on £52,000 down this week. Yeah, so it's obviously been following the sort of tech stocks and the largely risky side in this drop, not being the digital gold that everyone's suggesting it was. Yeah, so not too good. I thought probably best to really discuss the sort of Fed's actions in America. So they're sort of talking about raising the interest rates. You can see here, sort of Fed funds rate back in the sort of '07 crash was just over 5%, and they dropped it pretty much down to zero. In the sort of dot-com bubble, this was about 7%, and sort of going back to the 90s and the 80s and that sort of thing, it was sort of getting on for 15, 16%. So yeah, it's been coming down really for the last 40 years. And every time they sort of try and raise it, they only get to a lower point. So they sort of did all the QE after the '08 crash, and yeah, that sort of had the stock market bull run that everyone knows up to sort of the COVID crash. And they started raising the interest rates, trying to sort of taper off the balance sheet, which is what they're now talking about, sort of in 2016, 17 and 18. And you can see they got up to sort of 2.5%, and then they started to have quite a few bit of issues. There was sort of a reasonable sell-off in 2018 in the stock market, and there was sort of in 2019, I think it was, some fair issues with the repo market, they call it. So this is the sort of banks lending to other banks, and sort of, yeah, basically the infrastructure of sort of institutions basically lending each other money. And it's sort of like literally overnight money, which is supposed to be at sort of very, very cheap, 0.25% interest rates, I think. And yeah, that suddenly shot up to like 8%. So the interest rates and sort of tapering and everything were clearly causing quite a bit of issues. A lot of people attribute the sort of issues and cuts and everything to just COVID, but this was happening before COVID, sort of leading into, I think, mid to late 2019. So yeah, this was partly caused by what they are now trying to do. So we're talking about the QE stopping by March, probably end of March, and then they're saying probably raise interest rates. They're going to clarify this, but start raising interest rates immediately after, maybe in March. So yeah, and then tapering, quantitative tightening, as they call it, tapering the balance sheet off at a fairly rapid pace to try and curb inflation. So inflation, US inflation, I think is at 7%, but there is potential for them to sort of to go too hard. I mean, inflation could have peaked, 7% could be the peak, and now start coming down, and then they turn off the money printer taps and start aggressively tapering and raising inflation, and it could sort of turn out to be too much, and then they have to go back on themselves, same as they did here. I mean, COVID did sort of obviously cause a great deal of that, but they went straight back to printing sort of on a massive scale compared to before, and there's potential that something else could happen and they go back to that again. So yeah, just a little bit of history, but yeah, you can certainly see how sort of things can be volatile, but there is potential for them to go back to QE and everything that made Bitcoin sort of go on the up for, I mean, basically since the COVID crash. So a lot of people are obviously saying it's not providing the inflation hedge that they thought it was. I'm still of the opinion that inflation is an increase in the money supply. Whether it actually gets spent or not at the time, it's still there. So whenever it makes its hands into the public and sort of the institutions, sort of the velocity of money, as they call it, is kind of irrelevant. If it's there, the money is there, it will be used at some point, and yeah, it will make its hands into everyone at some point. So it's the increase in the money supply that really is devaluing the currency, and sort of inflation is the result of that. But I kind of think that is the symptoms, and sort of increase in the money supply is the cause. So yeah, and since that started, basically, Bitcoin and the rest of crypto has done really well since the start of the COVID crash. So obviously now people are projecting the future of tightening and sort of the opposite of QE and interest rate cuts. So yeah, it's coming down a little bit, but during the period of inflation, it's performed quite well. So yeah, everything's sort of obviously in the red. The large caps have sort of mostly done better than the very small caps. Bitcoin, as you can see, down 16%. The charts look sort of almost exactly the same as this for every coin, so I won't show them all. Ethereum sort of a little bit worse, 23%, but Cardano hadn't been performing that well, so yeah, only 16%, but that's been down anyway. Power Ledger, 15%, that's holding up reasonably well. OMG, yeah, this is where you start to get the bigger drops, so 30% on OMG, 23% on Litecoin, 20% on XRP, 28% on Basic Attention Token, 23% on Stellar, only 15% on Tron, but that's been doing quite badly anyway. 33% on Boba, the sort of extra part of OMG network. New Cypher, 24%. Solana, yeah, Solana, 31%. I've got £500 on the sidelines, sort of waiting to go in something. Could put it into stocks, but yeah, I'm kind of thinking of buying the dip on something here. I might wait, sort of see how this coming week pans out, but I was thinking of sort of putting that in today. Solana was down at £67 yesterday, so would have been nice to sort of buy then, but not really sure how low we're going to go, so I might hold off and just see how the next week pans out. Coco's 25% nearly, EOS 21%, Internet Computer 31%, so yeah, I was thinking of sort of averaging down on that as well. £16, still looking reasonably well. The development seems to be going fairly well, so yeah, might do. Dash 27%, Audius 34%, so yeah, I was really sort of considering averaging down on this as well. The sort of metrics look reasonably good. User growth this month, yeah, and sort of seems a relatively cheap market cap. I did compare it to Spotify before and thought it looked cheap. Now it looks very, very cheap compared to Spotify, but not the same business model, of course. Anchor 29% down, Quantstamp 29%, Band 35%, so that's one of the worst. Crypto.com coin 22%. Now they got hacked during the week, so that's not too bad considering. I think it was relatively small. They've said 15 million, but it seems like it was probably about 30 million. But they've said all the funds are safe. I guess they just mean they've got 30 million to sort of refund everyone. But people were reporting seeing zero balance on their app. So that's not very good. But yeah, it's sort of outperformed the other sort of small caps and even Ethereum. So not too bad, but yeah, it's hell of a red week. But we'll see where we go. If this is sort of the end of the bull market and we're going into a long-term red, then yeah, that's unfortunate, and sort of apologies to anyone who's followed me into it. Yeah, I can sort of afford to pretty much go back into hibernation for a good while until this comes green again. But yeah, hopefully everyone was sort of investing what they can afford to lose, or they were investing for the long term and sort of happy to take this downturn with a sort of 3, 4, 5 year time horizon. So yeah, let us know your thoughts in the comments, bad or good, and we'll see you soon.